Thank you all. Good morning. I'm happy to be here for this meeting. And so the first part will just be covering the MPC decision, giving you background as to their decision and the elements there. But I'll try and deviate a little from the standard, the way I've been dealing with this, meaning just move away from that standard presentation and try and create a bit more, give you some more information. Sorry about that. So I will deviate a little from the standard presentation, but I think it will still be within, it will help you understand better the decision that was made by the MPC yesterday. So in terms of some of the numbers, inflation remains well under control. That is a story that that will remain with us, but it's important to maintain the point that it is under control, well anchored. It has declined to 5%, that's the CPI, 5% in the month of August. And shortly there'll be the new numbers for this month. Non-food, non-fuel has come down to 2.8%, and fuel inflation has come down to 4%. And if you recall, fuel inflation has really come down from something like 17.4% in September of last year. That was the peak after the implementation of a new VAT on fuel. You remember that whole discussion. That was at 17%, and I'm talking of the inflation, the fuel inflation, meaning the movement in prices, 12-month movement. In September last year, it was 17.4%, and that has come down now to 4%. And it's true we saw a spike in international oil prices 2 weeks ago, related to the bombing, or let's say, attack on the Saudi oil facility. Prices shot up and then came down. And we expect that will have limited pass-through, or will have limited pass-through, so it won't have a significant effect on inflation. We did calculate some rough numbers, but again, those are numbers based on some assumptions, speculation, and things like that. So inflation is well under control. The economy, how is it doing? The leading indicators, I'll talk a bit about them, but I think I should say that you will soon have the second quarter numbers, meaning all of us, because they'll be released at the end of this month, in a few days. And these are the second quarter GDP numbers, so the provisional ones. But we expect that they'll show an estimate of 5.8% growth in the Q2 of this year. And this is based on our own assessment of the leading indicators and so forth. Some indicators are quite strong. Things like importation of intermediate goods, which generally feed into manufacturing. They are in terms also about electricity consumption and generation. That also has shown strong performance. Cement consumption. Tourist arrivals, I think all of you know that we have been having unprecedented, well, we need to do those words again, right? In terms of the arrivals, the numbers are unprecedented, and you'd need to look at them, but I think the numbers are there for all of us to see. And also, as I'll mention later, bookings, for forward booking in the hotels, in the various hotels, are quite strong, and I'll mention them in a few moments. So there are some strong positive indicators. Then you also have some that are a bit soft. And the one here that I think is worth mentioning is agriculture. with the delay of the long rains. You remember there was a delay in the long rains, and then also after that, it wasn't satisfactory, at least to farmers. And that obviously has dampened our expectation of dampened agriculture output. And so we expect a sort of a mixed outcome, but based on all this, mixing it all together, we have an estimate of around 5.8 in the second quarter of GDP of the year. Now, of course, the outlook going forward starts from those numbers, but I think we also have other things that we can tell you, which the MPC looked at, and this is the outcomes from the MPC market perception survey. I would note that a lot of you have found this very useful in terms of information, very much a treasure trove of information, and I think that is what we expected, that you'll be writing a lot from some of the numbers that are there, and we derive a lot of information. It's a good sort of feel, of you take the pulse of the economy from this survey. But I want to mention a couple of things from the survey. First is the high level of optimism with respect to growth prospects. So that has remained. This year we have seen very high sort of optimism numbers. So in September, the banks were at 87.5%, meaning they are optimistic. 87% of banks, let's say, of respondents were very optimistic or optimistic, so neutral. Well, not neutral, optimistic or very optimistic in terms of the outcomes, in terms of the growth prospects. And non-banks also are at 86% in terms of optimism, so optimistic or very optimistic, 86% of the respondents. These are good numbers, for sure. Also on given the backdrop of where we are, and let's say the noise that quite often is kicked up in our sort of discourse in our country. The positives, as indicated or as flagged by the respondents, were the Big Four agenda and implementation on that, the ongoing infrastructure projects that are there, the commitment of the government to clear pending bills, right? And also other things that were, let's say, the basis of their optimism is the intra-Africa integration. I think we know about the free trade area that kicked in on July 7th. The positive developments in the tourism sector, political stability, and the fight against corruption. All these were the others that I've left out, but those were the principal the reasons, let's say, of their positive outlook or optimism, sources of their optimism. Now, there are some risks as they flagged to us. The first of these is the interest rate caps, if those remain. The trade wars that are outside our borders. Obviously, we are talking about they were talking about the U.S. and China, and obviously their proxies. Delayed payments. So these are the pending bills. If there are further delayed payments, then this is a risk. Then another item, of course, was the low private sector credit growth. And there are others, but those were the numbers those were the, at least in general terms, the sources of optimism and also the risks as pointed out by our interlocutors. I talked about forward bookings, and forward bookings, it will be in the material that will be presented, that will be given later in this show. Sorry. I'll go to the old-fashioned thing, which is my binder. So let's see. There we go. Here we go. So in terms of forward booking, forward tourist hotel bookings. So September this year, meaning the September survey that we have, if you look at, let's say, what we have for December, we have 51.6% bookings, right? Compared to 42% last year at the same time, meaning comparing September to September this year and also September last year. So last year in September, if you looked at what was the bookings for October, only 42% were booked. Now we have 51. The month of November we have 58%, and the month of December we had 61%. So those are rather strong numbers. And compared to last year in September, when we had in October, as I said, 42%, November we had 44%, and December we had 47% bookings. So you can see there's a substantial increase, about 15 percentage points, which obviously is at this time, and we are talking December even. So we still have a few months to go, and the bookings are pretty solid. And I think a lot of you have seen in recent in the recent period that many of our hotels have even had 100%, fully booked, 100% occupancy, which is not something you see often in hotels. I think we all understand that. So that's something we wanted to put to you at this moment. I want to proceed with other things, if you don't mind. So the expectation, therefore, of the growth expectation for 2019 remains good. At this moment, we are projecting the same number of 6%. We will reevaluate it on the basis of the new, let's say, provisional Q2 numbers when we have them, which, as I said, will be released at the end of this month. And but we ask you looking at something. Well, for the quarters, I said it is 5.8, but for the year as a whole, we are projecting 6%, and we will reevaluate that on the basis of the outcome of Q2, meaning the first half of 2019. Now, are there any risks to this growth? And the answer is yes, there are many. And I wanted to point out a few to you. And I think the first one, which we all have to appreciate, is that the external sector is worsening dramatically. And the MPC meeting, the MPC, the committee that is, discussed during the meeting, discussed the external sector quite in a fair amount of detail. And the things that are going on there, of course, relate to the, they're not things that we ourselves have control over. The trade wars is one of them. I think we understand that. The appreciation that there will be no winners in the trade war hasn't fully been absorbed by all the players around that war, all the fighters, all the warriors in that war. That is one that I think is quite clear. The other one, of course, is on top of that, there is uncertainty about the response, the policy response to the things that are happening in the global forum, in the global environment, global markets. So I think some of you have written about this, or you've seen stories about how let's say the central banks in the advanced economies will respond to the specific situation that is facing them now, including the softening of the global economy, meaning the projections now are being shaved down, and we expect some projections to be confirmed in about a week or so, the new projections that the IMF does, and ahead of their annual meetings. So this is something that I think most of us, or most of respondents or observers, do not have a clarity as to how the central banks will respond. And I think we can discuss that later. For now, I think it's sufficient to say that. There are other issues as well. I mean, they are indicators more than anything else. You did hear the problems that were there in the US dollar market, meaning a lack of liquidity or seizing up in the repo market, which cascaded into other markets. Now I'm talking about that not because we are directly connected to them, meaning we are not in the same market, but the point is that that sent shockwaves across the financial sector, the financial markets of the world, and we therefore need to be more, let's say, careful, or in terms of, knowing that we are in a very, let's say, uncertain times. We are in uncertain times, and therefore we need to be cautious because we may be hit by another shock that is coming from, let's say, the advanced economies. So the environment is one that is less clear. There's another element that I think we need to put out there, and this also the MPC looked at, which is the consolidation, expected consolidation in the fiscal, in our fiscal budget, and the MPC was presented with information and discussed the plans, or let's say what has been going on over the last few weeks. And in particular, the National Treasury, over the last few weeks, they've redone their budget from the ground up to make it more realistic, meaning they wanted to assure themselves that the budget is realistic. And they've done a sort of a ground up build as opposed to top down. And they've come up with numbers that now will obviously be presented to the appropriate authorities, including, I assume, the parliament and including yourselves. But the point is that the numbers indicate a consolidation for this year. And the consolidation is expected, the target here is expected to be in financial year 1920, which is this one, a target of 5.9%, which really is an improvement from the outcome in FY 18-19 of 7.6% of GDP. So you can see there's a significant consolidation. And the issue there was, is it realistic? I mean, you can always do up a budget that looks nice, but is it realistic? And this really was the criteria, the most important requirement in the budget that they are now putting together. Now, what if they overperform? What will happen? It's true they can overperform, but if they overperform, the idea there is it will lead directly to a reduction in debt. So they will retire debt. Any overperformance in, for instance, revenues, or for that matter, overperformance in expenditures, whichever you want to think of it, the first beneficiary of that will be the reduction in debt. There is also the concern about pending bills, and this also has been addressed and will be addressed appropriately, which is, in the first instance, the bills or the carryover from last year would be the first charge, would be the first to benefit. So if there was any carryover from last year, the ministries will not be allowed to begin spending on other things. They first clear that, you know, and so there'll be a much more, let's say, tighter, let's say, execution of the budget along those principles. Of course, this was what the MPC was advised on, and they looked at more detailed numbers. But I guess what I would say is that you will have a chance to talk to the fiscal authorities in this regard. Where does that bring us? So the MPC was at a point where it could see there are clouds in the international markets and the global economy, which had weakened. And I think the numbers, as I said, that will be coming back to us will be much weaker than the numbers we saw, say, 2 months ago, the projections for global growth. That was one, but at the same time, they saw the potential for consolidation, meaning realistic consolidation, fiscal consolidation, and therefore saw that there could be scope. If this continues, there will be scope for monetary accommodation. So a sort of a loosening of monetary policy as fiscal policy tightens. So a rebalancing. We've talked about this in other occasions. We've talked about this rebalancing. And the example, as I said before, is fiscal was, if you are thinking of driving a car, fiscal had its foot flat out on the accelerator. And we, as monetary authorities, in order for the thing not to crash, we had our foot firmly on the brake. So the car obviously was struggling, and obviously you cannot continue like that for too long. So now if you have a rebalancing, then things will obviously be much more, will be safer and better outcomes. At the same time, of course, understanding that we do need buffers, because there may be a shock. There may be shocks, and we've been talking about this. Now, of course, we've mentioned this before, that we don't have just one buffer. There are buffers. So one of the buffers, of course, is having room to maneuver. So that's why you need to rebalance, so that you have room to maneuver on fiscal, and also you have room to maneuver on monetary if you are hit by a shock. We also have foreign exchange reserves, which we mentioned in the press release. And also, at the right time, when we get a precautionary IMF program, there will also be those resources available to us. For those of you that have asked the question before, where are we on this? The answer is we are still on that journey. We are in no rush. We will get there. We need to get there at our own pace, not dictated by somebody else. And I would strongly encourage you to follow Eliud Kipchoge, because the element here is you follow your own pace. Don't follow somebody else's pace. The runners in the room understand what I'm talking about. Okay, so those are I didn't say much about the external, the balance of payments, but a word on it may suffice, which is that the current account now has, let's say, the current account deficit has narrowed to 4.2%, and we expect the outcome to be somewhere, and this is from 5.5% last July, and we expect this we expect the outcome for 2019 to be 4.5% of GDP. And if you recall, we have always been saying that our norm should be somewhere around 5%. of GDP. That's where we expect our current account deficit to be based on our ability to finance it and other things. But the financing of the current account deficit is absolutely not a problem. And that's why we have had what I would call balance in the FX market. And it's true there has been some, let's say, perturbations in the FX market. And this has been, I mean, the principal drivers for that has been significant demand. It's a timing issue. Significant demand of some, let's say, payments, private sector payments. Dividend is one concern, is one big one, and a few others. So, and that kind of shocked the system. Also remember that the US dollar has actually strengthened significantly. And if you look at the table, I think it's probably in the package, you'll see that there was a significant strengthening in the last month, and now it's kind of weakened a bit. Your guess is as good as mine where this will go in the context of trade wars and things like that. But anyway, we could have that conversation in terms of where we expect the US dollar to be relative to other currencies going forward. I want to say two other things before, no, maybe I should therefore talk a little more about the decision itself before we move into other items. So the decision itself was, if you read, there's this element of the prospective tightening in fiscal policy that will provide scope for accommodative monetary policy in the near term. That is forward guidance to you and to your readers. That the expectation is if things go the way they are going and the fiscal policy, the consolidation actually takes place as planned or as announced, because it is realistic, we would expect it to be carried out realistically, then we could actually get into a sort of let's say, monetary loosening cycle. That's really the forward guidance that the MPC provided the market and provided to you. Now, there is the issue also about which direction would lead to an accommodation, as we've been talking about the perverse reaction or the perverse outcomes of, let's say, what used to be a loosening. I mean, in the past, the loosening was clear, right? You just lower the target rate. But you may not get there if there are significant perverse outcomes. So the question is, how is MPC going to deal with that? Because they asked you those perverse outcomes, but maybe when we get there, we'll have that conversation, and they'll tell you what. But they did think about all this, and the key to it is that, in addition to other things, the uptake of the other, let's say, innovative new credit channels, which are targeted to, let's say, SMEs and similar outcomes. But we'll get to that when at the next MPC meeting. Then a couple of other things. The banking sector, I think, has now, I'm not going to go into the details of how it is, because we've rehashed those numbers quite a bit. But in terms of capital adequacy, liquidity, and all that, there are no concerns that we are close to the red line or the yellow line or any of these things. But that doesn't mean that we'll leave the banking sector the way it is. Obviously, the higher liquidity means that the banks need to move towards lending in particular ways. So, but at the same time, credit risk remains elevated. NPLs obviously have remained, well, they were, in August, they were 12.7 last June, right? And now they are 12.6. Well, that's a marginal change, nothing to write home about. But the point here is that lending has not grown quite strongly. It's grown by, I guess it's 6.3, right? 6.3%, year on year. Over the 12 months to July, to August. Yes, thank you, Rasha. But the point here is that banks have continued to resolve, or with the resolutions of the NPLs, non-performing loans, with increased recoveries and obviously repayments. The sector remains stable. Obviously, we have been pushing for the, let's say, a revisioning of the sector on the basis of a new normal, which we've talked about quite a bit. You've also noted the significant consolidation that has taken place. It would be good if somebody wrote about the consolidation, which has been market-driven. If you remember 3 years ago, and you can go back to your notes, there were a lot of discussions between us about whether market-driven consolidation would work. And some of you kept coming back to the issue of Nigeria, that we should follow the Nigeria model. I hope you can now see that there is another way, and that there may have been, and this also has prospects of continuation, meaning we are not done yet. We are not done yet. I'm not going to go through the list of this, but I think we need to flag the ongoing reforms, the customer centricity. We'll come back to that in terms of, for instance, the banking sector charter that is there, and also other things that are there, strengthening of business models, risk-based pricing, which is very important. I think we've discussed this before, and strengthening credit information sharing, and transparency, full disclosure on pricing, etc. These are things that you could say you're beginning to see the green shoots, meaning the tree is not yet there, but you can see the green shoots. So the tree will become a tree. I think all of us know that you cannot plant a fully grown tree. That doesn't work. You'll damage it actually, but you have to make it grow naturally, meaning plant the seedling, take care of it, and so forth. So we are there. What else did I want to say? Okay, so maybe in finishing, we could talk a bit about demonetization. If some of you may or may not. Oh, thank you. Some of you may or may not. So what has been going on with the demonetization? I think this has been working well, at pace, and we are proceeding to the deadline of September 30th, 2019, which is just Monday next week. It is true, let's first begin. This, I'm not going to give too much information because I still don't have too much information. I'll give you some information. But what I'll do is to promise to have a press conference next week, right? And then we'll have just a press conference on that. And then we can be a little more free to discuss these things. So put that on your calendar. I think what has happened is we've had some old stories, right? The old stories are things like, oh, there are no notes. The new notes are missing. Oh, the ATMs are not working. The parking facilities are not accepting my new notes and things like those. Those were teething problems. And again, as I said at the beginning, we didn't spread the notes, let's say, we didn't do volume. We actually distributed it all over the country for people to see, to taste, and be familiar with the notes and so forth. But after that, of course, we did distribute them at volume, and as you know now, that is not a concern whatsoever. So all those stories of ATMs and all that, those have been dealt with. And today now, there isn't a single bank that is actually giving you the old notes. I'm talking of just the 1,000, by the way. Not the others are okay, not the 1,000. And I think this is something that most people have appreciated. We have also been on a very strong public awareness campaign, very strong. And it has been elaborate, it has been layered, and at times targeted. So you know we've been on TV. We've been right from June 1, when the announcement was made, we've been on TV. We've been on media, on the print media, on your newspapers, quite heavy, particularly in the first 2 weeks. We've also then, we pivoted. This is a word that the comm people have taught me, you know, pivot. You pivot to things, you know. So we pivoted to what? To some other channels, social media, very heavy on social media at the beginning as well. And then eventually pivoted to the radio, right, to radio. That's not all, actually. We sent posters to every single primary school in the country. We used channels that follow the fast-moving consumer products. You can, you know, think of even your newspapers. We used your delivery people. I mean, they move stuff from A to B overnight. And we used all those channels, so there are posters everywhere. We also used the administration channels, chiefs, sub-chiefs, DCs, DOs, all that. And we are talking even the posters. All the other channels, the banks, commercial banks, their agents, the money agents as well, M-Pesa, money, those operators, M-Pesa, all the others. So in a sense, it was all points. But I think I want to emphasize this thing that even as it is layered, it was also targeted. At the end of the day, we knew that the concerns we would have if we didn't do a good job would be not so much you and me. It would be people that are farther away, like people in the rural areas that don't quite get all the information and so forth. And this is where we went on a rather strong campaign, call it a roadshow, and really targeted mashinani, you know, people out there. So we have been on radio, and as you know, radio is probably the most effective means of communicating there, and also redone the chiefs and sub-chiefs and so forth with barazas and things like that. So I think I've put in a lot of miles in terms of going from one place to the other, but I've also learned a lot about the country. So from my perspective, I think I'll do it again in a heartbeat, and I'll continue doing it for other reasons, meaning to understand, to really get a handle on how the country operates and things like that. So I just wanted to assure you in terms of the extensiveness of the public awareness campaign. We are still there the rest of this week and through the weekend into Monday. We'll still be there in the various channels. By the way, I'm sure everybody in this room who has a phone and an account has also received a text message from the central bank. There are questions about how we got your number, but hey, we know you. You're using our money after all, you know, so we know you. Okay, so that's the general atmospherics, if you may, about that. But let me give you a few numbers, right? I'll give you some indications here. So you'll ask, how has this exchange worked? And, or rather, well, you know how it has worked in terms of who should have gone where. But in terms of numbers, 58%, 58% of currency exchange, let's say to September 1. Now let's talk the period to September 1. So just this month, leave out this month. Let's go to September 1. So those are 3 months. Yeah. So June, July, August. 58% of currency exchange in value terms, was less than 500K, was less than 500,000. 75% of currency exchange in value terms was less than 1 million. And even if you want to go a little further, 91% of currency exchange in value terms was less than 2 million. So there goes that notion of, there are people with serious money somewhere. There are not too many of them, frankly. At least we don't see them. So most of the exchanges, as you would expect, you and me will probably bring in our 10K or 20K, which you keep for, various emergencies that may be there. What about in terms of numbers of transactions? Numbers of transactions. So that was only in value terms. In terms of numbers of transactions, 96% of the transactions, 96% were less than 500,000. The value of that were less than 500,000. And 99% were less than 1 million. So I just want to assure you that we are talking small transactions. So suppose you asked me, how many, so Governor, yes, but how many exchanges, meaning conversions, people coming in over the counter with money, cash, and wanting to exchange that? How much of that was above, let's say, 2 million during those 3 months? How many? I'll tell you, only 24. Yes, you heard right, 24. Only 24 were above 2 million. You're getting shocked. And the average of that, let's talk the average, was 3.1 million. 3.1 million. I'll leave that there. I'm not going to elaborate or editorialize, but we can do that when I meet you again in about a week. Okay? Now, what has been happening? Have we been having people rushing into banks and all those other things? What happened, Governor? Actually, the highest conversion was in June. June, the first month. 53% of the conversions of those 3 months was in the month of June. And actually it was in 2 weeks, the last 2 weeks of June. Now, like the most recent numbers I've seen, it's even less than half of the pace that we had then. So people have converted. It's true there are people that are still converting today. Maybe in their mind, this is their optimal reaction. It's their decision. They can do whatever they want. They can even choose not to convert. That's their choice. But I think the point I'm making is, I think these are the facts. This is the data, and it may not match what some of us were thinking was going on. But I think it's good to see that the demonetization, at least by these numbers and the information I've given you, is proceeding at pace. There are other things I want to mention in finishing about the demonetization. Yes, remember the AAML CFT, that is anti-money laundering and requirements on combating financing of terrorism. Those requirements remain. So the banks don't just convert randomly when you come to the door. They actually, when you come to their counter, They have to go through those checks, KYC, and then once they're satisfied, they'll then make the conversion. So that remains. And yes, it has led to some discoveries, let's put it that way. We've also seen some counterfeits. We've seen them, and these also have been followed. So as I had said before, we are working hand in hand with some of the investigators who are responsible for these things, meaning investigating the counterfeits, investigating those sort of other requirements that are there. So, and that, of course, you'll continue to hear more about it, about those sort of, what is happening to those people that have been, apprehended with counterfeit things, currency, and so forth. Then finally, other jurisdictions. We've received very good support from other jurisdictions. I think I mentioned last time we met, we've been in touch with our, let's say, our sister central banks. In particular, the East African Community, and importantly, Uganda and Tanzania, South Africa, DRC, and the list goes on. A little farther, you have Mauritius, you have India, and the list goes on. Because we know that we cannot work in isolation. This is something that needs to be dealt with from all angles. And they fully understand this, and they've been working with us and also working with their, let's say, investigative agencies once material information comes up in terms of that. I would say that we have already, the Ugandans and Tanzanians have already finished their conversions, and indeed repatriated their holdings of Kenya shillings, the 1,000, the old 1,000s. So all that has been done, waiting for the deadline. So the deadline will come to be just another day, and the day will end, and we will move on, having finished our demonetization campaign.